Hey guys, it's Reese Trainer from the Vanguard team at Manor Realty. Bold claim here. Sometimes B lenders can be cheaper than A lenders. And I've been doing this for a long time, guys, and I've never heard this before. But I have with us today Amanda Pivar. She is from the Mortgage Connection. She calls herself a mortgage agent. I call her a mortgage specialist from the Mortgage Connection up in the GTA in Toronto. And I know Amanda because Amanda's also an investor. She's doing a lot out in St. Catharines and is potentially bringing people down to the Windsor area because she sees the same things, guys, that I preach on a regular basis on the videos. So, Amanda, thank you for joining us today.
Yeah, thanks for having me. Happy to be here, and I'm happy to show you that I am correct that a B lender can cost you less than an A lender.
So, I'm never ashamed to say when I don't know. And as I've been in this business now over 20 years, um, I'm still learning and I love that. But this is something that I just have not heard of before, where you can straight up show us today that there are certain circumstances
Yep.
where, and it's quite common, there's a lot of you that are in this category where
Abs-
it ultimately is cheaper to go with a B lender instead of one of the big banks, which are the A lenders like Bank of Montreal, Royal Bank, that sort of thing.
Absolutely. I think B lending has the biggest misconception, and that comes from years ago. People always thought, B lender, bad credit, too much liability, not a great option for lending. But nobody talks about the positive, and that's self-employed. More and more people are becoming self-employed, whether it's owning a company. Even a lot of the big banks now, they're hiring people as consultants, so they don't have to pay pension or insurance if people are opening corporations. So that's why mortgages had to keep up. And now the B lender is better than an A lender for some self-employed individual. And I know you have my slides to kind of break it down for everybody to see exactly how that is.
Yeah. For some reason, we were having technical difficulties, guys. I don't know why Amanda can't share her screen. So
Yep.
I have the slide deck and she's going to prompt me through it. Do you want me to go to it right now?
Sounds great. And then I'll start getting right to why my claim is right.
Yeah. So, guys, I am really surprised that this is a case. And so, what you were saying is basically that this is going to be cheaper for the self-employed. Is that basically the group?
Absolutely. It's cheaper for self-employed individuals. And when we have my slides up, I will break it down as to why that is and the biggest piece people are missing when taking in consideration getting a mortgage in A versus B.
But is this, is this because of like stated income? Is it stated income people basically? Is that what it is?
Is indeed. So anyone who is sole proprietor, corporation. So anytime we're looking at somebody's income and they're self-employed, we're always using a 2-year average. So when we're looking at someone's 2-year average, let's face it, if you're self-employed, you're keeping as much money in your company as possible to avoid on that income tax. Income tax bracket can be a huge difference if you look at the money that you need on paper to qualify versus what you actually show. So when you actually look at what income tax cost you is how we start getting into the B's less. So if you want to flip through to the next slide. All right, so a little bit about the B lenders. So we'll start off with the obvious. Rates are a little bit higher than a traditional lender. We will still factor this in. B lenders usually have shorter terms so that you have options of getting out if you want. They charge a fee. A lenders don't charge a fee, but again, this is going to be factored into why it's cheaper, and you can also auto renew. This is important because once you're with the B lender, you don't have to worry about qualifying again. You can just stay that route and it's much easier and you don't have to pay that fee when you're requalifying. So traditionally, everyone always thinks it's good for clients with bad credit, minimal income, lots of debt, but we're going to focus on those self-employed individuals. If you don't mind heading to my next slide. All right, so I did a little scenario for you for a self-employed individual to figure out exactly why it is better for them. So our fake client right now, his name is Joe. So Joe's owned his company for 3 years.
Is this Joe the plumber?
Joe
Actually, no. Actually, Joe the plumber just
Packard.
died, didn't he? That's horrible.
But yeah, so Joe's owned his company for 3 years. Joe's company makes 200 grand. That is a great earning, but Joe doesn't want to pay the government taxes, and I don't blame him. I don't either. So Joe only takes out about 50,000 a year to show on his T1 generals. Joe's ready to buy a house for about $1 million and has his 20% down payment, which is key. Anyone who's going to qualify for this program must have 20% down payment. In this scenario, Joe's buying an owner occupied, but this is good for anyone who's buying that cottage property, that second home, or even investing. A lot of people who are self-employed also love to invest to kind of diversify their portfolio. So this would be a program for you. So if you don't mind flipping to my next slide.
Yeah, I mean, this looks like a big time problem from my perspective as a real estate agent. I don't know how you're going to make that work.
Like the bank is saying no. You walk into RBC with these numbers or any of the BMO, CIBC, they're going to say absolutely not, Joe. You don't qualify. So important for Joe's income. So anytime we have someone who's self-employed, we ask for their 6 months business bank statement to analyze their income. So if we look here, I've pulled approximate numbers of what Joe earns on a monthly basis through his company. And then I times it by 2. We always times everything by 2 because it's 12 months, not a 6-month year. And we take away about 20% for expenses. So we always take away some expenses, but that still leaves Joe with $160,000. Let's face it, and you said it yourself as a real estate agent, qualifying on 160 is much nicer than qualifying on 50,000.
Yes, no doubt. And that's the stated income part of stated income.
Exactly.
Yeah, because guys, you have to understand that, if you're in business for yourself, we have access to write-offs for everything. Right.
Internet, phone, you name it, you write it off.
Right. Yeah. So it's great. And I mean, I experienced this as a real estate agent. I mean, I was making tons of money my first couple of years in the business. And, I was I was well over 6 figures in sort of real terms. But then I had all these write-offs. And the bank's like, oh, you're not making enough money. And I'm like, well, yeah, I am. But then I get all these write-offs. And like, well, we have to look at everything.
They have to look at what's factual. And what's factual for them is what's on your T1 generals and your notice of assessment. That is not a true representation of most self-employed individuals' actual earnings.
Interesting. Yeah, I mean, I had to basically, for me, I had to have a family member guarantee my first couple of investment mortgages.
Yeah.
When I was investing, it was all my money. They never had to put anything, but they were basically saying I wasn't making enough money. And I'm like, well, how do I have the down payment then? Is that magic,
Same here. My dad had to co-sign on my first 3 properties.
Because there you go. Yeah, I didn't want to say the Bank of Mom and Dad, but yes, it was the Bank of Mom and Dad. So yes.
Good co-signers. Perfect. So here's the next slide. We're going to get into some technical stuff and look at how this is actually going to save money. Because for now, I've just given you some numbers. And now here's my proof. So anytime when we're looking at somebody's who's self-employed, we always have to do 2 years on that T1 general. So that government notice of assessment and tax accountant prepared documents. So if we look at Joe's income on $50,000 over 1 year, Joe's paying income tax of $10,601. But of course, we got to times that by 2 because 2-year average is what we would do. Okay. If Joe decided, you know what, let's go with an A lender and show that 160, Joe's income tax jumps to $53,160 for 1 year. So again, we'd have to times that by 2, and Joe is paying the government over $106,000 in income tax. Now, Joe, remember, his mortgage amount he wanted was $800,000. We always have some lending fees with the B lenders, about 1 to 1.5%. So in this scenario, Joe's lending fee is 1.5%. It's costing him $12,000. Again, we know rates are a little bit different, but over a 3-year period, Joe went for a 3-year because let's face it, the market's a little shaky with rates right now, so he wanted to be locked in a little longer. And over 3 years, the difference in interest was only costing him $11,531. So when we look at these numbers, it's a really big difference between the extra costs associated with B lender versus the income tax save. So how much did Joe actually save by going the B route? And that is on my next slide. All right, so if you look at what income tax difference is between the $50,000 versus the $160,000, that's a total of $85,118. Now, Joe had a couple extra mortgage expenses, so we take that away from the income tax save, which was $23,531. And overall, on income tax alone, Joe is actually saving himself $61,586. So it is saving Joe a lot of money on income tax by going with the B lender versus going with an A lender. And most people, when you're a self-employed individual, This isn't explained to you. People just say, oh, show more money on paper. Let's try to get you
Right.
the traditional route. But really, that traditional amount is saving you or costing you a lot of money versus going to the B lender that overall is actually going to put more money in your pocket, which is always good for your next investment.
I've never seen it postulated like this before, but you're absolutely right. That is the cliche trope is,
Yep,
especially like cash businesses, right? Like bar owners, restaurant owners, that sort of thing.
absolutely. Even people
When
who,
they go to prepare to sell their properties, guys, they will start gradually showing more on the books
yep,
so that it's more justified to the buyer to buy the place. And it's interesting. It's because this is along the same lines, isn't it? It's saying, hey, yes, in this case, we're talking about Joe. I'm going to call him Joe the plumber, but Joe. but so Joe the plumber's making all this money, but he also gets all these write-offs. And what words of wisdom he's going to get from a below average mortgage broker, below average real estate agent is, well, you're just going to have to declare more income on your taxes and not take advantage of some of those tax savings that are actually available to you if you're going to want to get a mortgage.
exactly. It's not even just the tax, like the write-offs that come with his company. When he keeps more of that money in his corporation, like he is, he's only getting taxed at 12%, versus if he actually shows 160, he's getting taxed at a much higher tax
Well,
rate.
sure he is.
Even more
Yeah,
money saved for Joe.
that is so. I've never really seen it postulated like that before. I really like that because it is. It's spot on. Yeah, you're going to spend if you match up an A lender to a B lender head to head. Yeah, you're paying more for the A lender,
Of
but
course.
for the self-employed individual to get that A lender mortgage, it's going to cost them more money to get there than what they save on taxes.
Absolutely. And people just don't break that down. It's just the biggest misconception that, it's going to cost you a lot more. But really, if you look at your numbers, it's saving you a lot of money. Let's face it, 61,000, that could buy somebody a rental property somewhere in Windsor because that's 20% down that they would need. So not only are they able to now buy their first property, they could also save that 61,000 in Joe's scenario and buy an
Yeah.
investment.
Earlier in the slide, you were talking about some of the other potential types of people, like people going through bankruptcy and that sort of thing. Well, why does it pertain to them as well, if you don't mind me asking?
That was just my example of what we would normally use B lending for. And then the very last one was self-employed, which is the one that I'm focusing on. But B lending, when it comes to anyone that has bad credit, they'll look at different scenarios and they're because they are charging that fee and having that slightly higher rate, their risk appetite is a little bit on the higher side. So this
That
one
makes
doesn't
sense.
have as much money, but that was just examples of other people who look at B lending, which is where I think B lending unfortunately got their bad name from because everybody looks at my top three examples, not my very last one that actually saves you the money for self-employed.
Well, that's it. You're right. Yeah, there's some stigma with the first three. There isn't with the self-employed person, is there?
No, absolutely not. That is like a normal, smart way of running business right now. Because look at how much money you're actually saving in the long run.
Including us, right?
Yeah, it's very true. And
Yeah.
I think that before, even the banks are not hiring like they used to. They're hiring contractors and paying them into their corporation. So more and more people are going to become self-employed over, say, the next 5 to 10 years because the banks have found a loophole to save themselves money because we all know the banks would love to save themselves money and not actually pay their staff as much.
Well, down here you've got more and more sort of. So Windsor's diversifying heavily economically, but there's still, we're still the world center for tool die mold making. We also make a ton of parts, right? People think, oh, Windsor's a car town. No, no. Windsor's a manufacturing town. We make everything for everybody.
Yeah,
Like you need little medical stints that nobody else in the world can make. Where does Boston Medical go to get those? They come here. Like
yeah,
we do everything, and contracted employees have gone up because sometimes you just have that one sort of 6 month or 1 year manufacturing project,
yep,
and they'll bring in contracted engineers and contracted skilled trades to
exactly.
affect that result, and then they'll jettison them again. Yeah.
Exactly. Get them in a corporation so that they don't have to pay health insurance while they're here. They don't have to pay into their EI and CPP. So yeah, it's really becoming a more popular way of being paid, and people love it. I mean, anyone who I know who's on a contract with a bank through a corporation, they're paying 12% tax versus if they were, say, working for the bank and getting paid a T4, they're paying almost 30% tax in some situations. So of course they want to be incorporated.
Do you have anything else to add before we're done?
This is all about my B lending, and I think you can admit I was wrong and proved you wrong on this one. That yes, indeed, lending
I
can
just
cost
didn't.
less.
I was like, how is she going to prove this? That I can't find a B lender that has a cheaper interest rate. But yes, you're absolutely correct in approach there. Um, Guys, I'll put Amanda's contact information below. So not all mortgage brokers were created equal. Not all real estate agents were created equal. And the reason I talk with Amanda is I recognize that there's this knowledge base that most brokers do not, or agents, mortgage agents do not have. And she's also an investor, right? So for the investors out there that go to the to our Windsor Essex real estate investment channel, right? These are the type of people that you want to deal with because they're also landlords themselves. They know what you're trying to achieve because they're trying to achieve it themselves, guys. So we'll put Amanda's contact information below. As always, guys, subscribe. And there's web links below to our Facebook investment group. And if you want to get all of our exclusive listings and pocket listings, pre-MLS listings, there's a link to the application form below. And if you want to talk to us one on one, it's also on that form as well. So, Amanda, thank you so much for joining us today. Really appreciate your time.
It was great at any time.
All right.